Hey there, and welcome to my channel, The Paper Bag Investor. Today's video, I want to share a few really quick thoughts, 3 quick thoughts with you guys about Lemonade's Q4 2020 letter. I want to share a few things I liked, something I think's been misunderstood by the market out there about Lemonade, and then one red flag for me with the letter, and hopefully that gets answered in the earnings call tomorrow morning. But let's get into it. Before I go any further, just make it absolutely clear, not a personal financial advisor, just a guy with a paper bag on his head who loves investing, loves thinking about the future. If you get value out of this video, I encourage you to subscribe. And without further ado, let's get into it. So again, a few things I liked from the letter. I want to talk about that first off. The premiums per customer are still growing at about 20% year over year, up to $213 per customer. So that's awesome to see that continuing to expand as the customer base grows into more lucrative products, essentially more higher premium products. And then another thing I liked was the annual gross loss ratio declined from 79% to 71%. So that's continuing to decline, even though they're still a very new company pushing out new products, new geographies, new countries even, and that's still declining a little bit is really awesome to see. Also, I liked it that they're forecasting about $375 million of in-force premiums at the end of 2021. So still expecting a lot of growth continuing to the end of 2021. If you assume approximately $255 premium per customer, which would be about 20% year-over-year growth on that premium per customer number. So then you do the math, $375 million in-force premium, say they get to that kind of number at the end of the year, and $255 per customer, you'd expect about 1.47 million customers at the end of the year. So about 470,000 new customers on the million or so that they have right now, is about 47% increase in customers, which is not bad. I like that. I wish that was even higher in their growth, sort of expected growth in the customer base, even if they were, lower customers, even if it was less premium per customer, like they were more young people with buying renters insurance. I wish that the number of customers would continue to push out, because that's kind of the first base, the first metric, and then from there your customer base can grow into new products. But I guess they still need those products sort of growing at the same rate, so maybe that 47% is still reasonable. For reference, they gained about 360,000 new customers in 2020. So that's 360,000, and so the actual rate of customers year over year would still be accelerating in that case, which is good. Obviously, the year over year percent growth would be declining. Okay, something that I think is being misunderstood. Just kind of seeing some of the reaction. You see people on Twitter talking about Lemonade. Something I think is being misunderstood is that people just look at the revenue number for Lemonade. And I think it's probably better to track the gross earned premium, especially at this phase in Lemonade's growth story, because it says right here actually in their letter, if you scroll down, revenue, fourth quarter total revenue was $20.5 million. Note that our proportional reinsurance agreements went into effect at the beginning of the third quarter, increasing the proportion of premium that is ceded to 75%. This meaningfully improves capital efficiency of our business, but can make year-over-year comparisons of revenue misleading. And a lot of people just point out and say, whoa, what the heck? It's like an $8 billion company or whatever the market cap is right now. And they say, wow, but they have revenues of $20 million. Makes absolutely no sense. And in the quarter, $20 million, like this makes no sense, and it's declining, like what the heck. But really, if you kind of have to take a step back and look at Lemonade's their whole strategy is to grow, and they make this very clear in their letters and their communications. Their whole strategy is to grow as rapidly as they possibly can, growing their customer base out with this digital structure that's more efficient, that can be more efficient. And as part of that rapid growth that they're doing, they're employing reinsurance policies which help prevent sort of a catastrophic failure. So say their insurance models are not accurate enough, or maybe there's a huge disaster, coupled with maybe their models aren't as good as they thought they were. They could be a huge disaster. Could be catastrophic for a company that didn't have that kind of reinsurance protection that was growing as fast as Lemonade is. So it helps protect them from that kind of catastrophic failure as they grow rapidly. Now the plan for Lemonade obviously is if they grow as they grow faster, or as they grow rapidly and expand, as their insurance models get better, I'm assuming they're going to pull back the reinsurance that they use on different insurance products, one product at a time, and that's going to actually bring in the actual bottom line revenue, because the revenue is not going away through reinsurance. It's going to bring that in, and it's going to bring in the profitability. That's kind of the long-term goal and perspective you have to have as a Lemonade investor. And so when people just say, their revenue is 20 million, like these people do not understand, and they haven't really looked beyond just looking at a graph like this, and haven't really considered or thought about it, or some of that nuance. So that's something I think's being misunderstood. Okay, and one red flag for me from the letter, and I tweeted about this. Hey, Daniel Schreiber, in the Lemonade call tomorrow, can you touch on why customer growth was only 6% quarter over quarter for 59,489 new customers in Q4 of 2020? The lowest customer gain since Q3 2018, which I forget that quarter, I have it in a spreadsheet. It was like maybe 40,000 or so. This is my main concern from the letter thing. So I really do hope they discuss this a little bit, whether it's prompted by my tweet, he even sees this, or they just happen to discuss this. I really hope he does, because to me this is concerning. If you look back, if you look down here, the customers are growing rapidly. It's 50% year over year growth. Like I said up above, it almost looks like they're kind of expecting maybe like in the high 40% in the next year, which isn't really that bad when you consider it was 56% this year. But considering it was 100% the year before, and considering that they're trying to grow that customer base as rapidly as they possibly can, you kind of wish that there was more growth. Now, I know that it's typical in the third quarter of each year they get more customer growth. That's kind of the boom, and that makes sense because that's your fall of the year, and that's when a lot of people, especially in North America and our kind of our schedule, that's when a lot of change is happening. People go off to college, they move, things are changing, and maybe this year 2020 was different, but so that's, I know, kind of a booming quarter, and then the fourth quarter can be a little bit slower. That's sort of seen the last few years quarter over quarter data. So it kind of makes sense that it's pulled back, but it's actually quite significantly pulled back for just below 60,000 new customers. You want to see that higher. So to me, that's a concern. Are they kind of tapped out in the markets they're in, and maybe they just need to grow into more markets first, or tapped out in the markets they're in with the insurance products they have, and they need to essentially just expand geographically into more areas, which they can, which I know they want to do. I really hope they touch on this, because that is concerning. If you're only getting that kind of it's not as high as a growth as you'd be hoping for as a Lemonade investor. So I really hope that they discuss this tomorrow in the earnings call. Okay, so that concludes my video. Hope you got some value out of this. Still processing some of these thoughts. Still really curious to see what the earnings call reveals tomorrow. Hopefully there's some light shed on that customer growth. If you got value out of this, I encourage you to hit that subscribe button right down there. Hit the thumbs up while you're at it too. Helps my channel grow. Helps the YouTube algorithm. Okay, thank you so much for watching. I'll see you in my next video. Cheers.